Hello guys, welcome back to our YouTube channel. This is your faculty Sudarshan from Hari Academy CACS CMA. For the past 1 week, we are completely engaged with the CMA Inter videos. So this is a time we are going to do it for CA Foundation for June and September 2024 examination. Why this video, sir? Because you know one thing, in your paper number 1 accounting, you will get true or false, right? The true or false you will get for 12 marks, that is 6 questions of 2 mark each will give you 12 mark. Many of the students are suffering. They don't know how to write this 12 marks. They know the answer is true, they know the answer is false, but some of them don't know how to read that reason. Many of them are don't know, and many of them are omitting those points. So what we have done, we have consolidated all the true or false of RTPs, MTPs and past question papers we have done here, as we have restricted ourselves to a topic of super 100 true or false. So we have not covered book back true or false is not covered. While watching this video, you may come across with book back question. That book back question is already been tested, so that only we have taken it over here. So once you refer this 100 plus your book back question will give you a guaranteed 10 marks. Okay, guaranteed, minimum guarantee of 8 marks, maximum 12 marks. Okay, so somehow it is an average between 10 marks is there. So this is going to be presented by me to all the CA foundation students on all India basis. This is completely going to be in 100% English session. Okay, so those who want to get this PDF, you can WhatsApp to this number with your name, place and your email ID, and whether you are a new CA foundation student or you are a repeater. Okay, before starting this, I will give you a clarity. Watch these videos maximum at a standard speed. Okay, if you are feeling difficulty where I was speaking low, you are consume more time on it, just watch the lectures at 1.25x speed. Or else, if you want, if I was speaking very slowly to explain that process, at the time watch the lectures at 1.5x speed. Don't exceed more than that. You need to have some more meta clarity, some more keywords should be there. Okay, here in this PDF, whatever the highlighted part is in blue, it is a keyword. You need to write it in your reason. Okay, you need to write it in your reason. Okay, don't ask immediately this PDF after seeing this introduction 2 to 3 minutes. Just watch all the videos which I'm going to discuss with you for this 100 MCQ, because in between that 100 MCQ I may change the reason, I may extend the reason. Okay, I may give you more clarification. In this 100 you may think it is 100 true or false. At the end, at the completion of the video, it may become 110, it may become 120. How? That's a slight change in the word, slight conceptual technique in the word. I may also tell you that. So watch the videos till last. Okay, and I want everyone to be watched at a standard speed, max to max. Okay, because you are having an exams in another 1 hour. That is a today, tomorrow is your exams, right? So this video is going to be available on today night only. I'm recording this today at 6 a.m. You will got this video and you can easily do it. Okay, next we'll quickly go through this. Before getting into start, I will quickly give you a tip over here. Many of them are asking us, so how to present your paper. For the presentation, we will take it through a certified copy video. For the previous attempt, we have already uploaded that. The same videos has been given in the description below. Watch that. The study plan of 4.5 days plan along with purely an MTP analysis is also done. Watch that video. It is a newly uploaded video 3 days back. Watch that video. How to score 60 plus, it is a before 3 months itself we have uploaded a video for June 2024 attempt. Watch that video. Watch everything at 1.5x speed or 1.25x speed. Then those who want to revise the concepts, we have uploaded a video for bonus, dissolution, NPO, FA, final account, single entry. NPO, financial accounts and single entry, we have uploaded in the name of CMA Inter Exam Oriented Batch. In that playlist, you will got this 3 videos, revision videos you will got. Bonus we have done, and resolution is under the name of CA Foundation only. We'll quickly go for the CA Foundation paper 1 accounting. So first question for our discussion is, an overhauling expenses of an engine motor car to get better fuel efficiency is a revenue expense? Definitely not, because after the better fuel efficiency I can run the motor car few more kilometers rather than before. So it is not a revenue expenditure, it is a capital expenditure. How the reason you should write? First write the false. On the next line, right, overhauling expenses of an engine motor car incurred to better fuel efficiency. These expenses will reduce the running cost in future. Thus, the benefit is in the form of long-term advantage. So it should be capitalized. Here the term capitalized is a keyword, and this is also a keyword. Expenses will reduce the running cost of the machine. Okay, next one. This benefit is for the long term advantage. Question number 2. Depreciation is a non-cash expense and does not result in any cash outflow. Definitely true, because the depreciation is a non-cash expense. Unlike other expenditure is a keyword, like you need to give them examples like wages, rent, salary does not result in any cash outflow. Here it is like other expenditure means wages, rent, salary. If the bracket close, that point is end. Does not, here does not means depreciation does not result in any cash outflow. Therefore, depreciation is a non-cash expense and does not result in any cash outflow. Next, third one. Fees received for a life membership is a revenue receipt as it is recurring nature. That's what they have given. So that point is it is false, because life membership fees received for life membership is a capital receipt as it is non-recurring in nature. Anything which is non-recurring in nature will become a capital. Anything which is recurring in nature will become a revenue. If it is in the nature of receipt, it will become revenue receipt. If it is in nature of uh, non-recurring basis revenue, it will become a capital receipt. So here life membership fees is a receipt under the name of long recurring, so it will be treated as a capital item and it will be directly added to the capital fund or general fund. Next, fourth one, interesting question, important question, mark it as important. If a closing stock appears in a trial balance, if the closing stock appears in trial balance, the closing inventory in then not entered in the trading account, it's shown only in the balance sheet. Definitely true, because if the closing stock appears in the trial balance, the given purchases is known as an adjusted purchases. The closing stock appears in trial balance only when it is an adjusted against purchases. When already closing stock is adjusted against the purchases, then only the trial balance will appear on the closing stock. So the passing entry will be closing stock account debit to purchase account credit. In that case, closing stock is not entered in the trading account, it is shown only in one side, that is a balance sheet. Okay, so they may ask you a different question on that part. When the closing stock is not appearing in the trial balance, then what you need to do? If the closing stock is not appear in the trial balance, if it is appears in the adjustment, you need to show it in trading account also, you need to show it in the balance sheet also. Then question number 5. Inventory turnover ratio is also known as stock turnover, because the another name for inventory is stock, so it is stock turnover ratio. The answer is inventory turnover ratio is also known as stock turnover ratio. It establishes a relationship between cost of goods sold, COGS. What is COGS? Opening stock plus purchases minus closing stock, plus if there is any direct expenses, you can add the direct expenses towards the purchases, and then average inventory held during the year. That's what the inventory turnover ratio is. Question number 6. Expenses in connection with obtaining a license for running a cinema hall is a revenue expenditure. The answer is false. Why false? Because without a license you cannot run a cinema hall. So without a license, if you cannot run a cinema hall, you could not generate a revenue. So it is acting as a mandatory thing and it will become a non-recurring in nature also. So we will treat them as a revenue, you will treat them as a capital item. Okay, capitalized expenditure. Hence the cinema hall could not be started without a license. Expenditure incurred to obtain the license is a pre-operative expenses, that is a pre-operating expenses which is to be capitalized. Such expenses are not a revenue and it is will be amortized over a period. It will be bifurcated and it will be deferred over the period. Then question number 7. Reissue of a forfeited shares is an allotment of shares but not a sale. The answer is false. A forfeited shares is merely a share available to the company for sale only. Okay, because the forfeited shares has been recaptured, retaken by the company, not because of merely paying that remaining money, that is, and whatever the allotment money or the first call money or the second call money as per the theoretical perspective, and remains vested in the company for that purpose only. For which purpose? For the purpose of sale. At the time of reissue of forfeited shares, not allotment of shares, it is only a sale as they have already allotted earlier. Then question number 8. If the effect of errors committed cancel out, the errors will be called as compensating errors and the trial balance will disagree. Here the thing is, if the effect errors are committed cancel out, the errors are called compensating errors only, but the trial balance at the time for compensating errors, it will agree. Agree is the keyword. Here I will give you one more tip on the true or false. You will get 6 true or false, right? Out of which maximum 4 will be false. This is what the past trend is. Out of 6, maximum 4 will be false. Remaining 2 will be true. That's what the trend is. Or else 5 questions will be false, 1 question will be true. If the ICA wants to set the paper as per the past trend, if they want to play with your first paper itself, then what they will do, no? They will do 2 is only false, remaining 4 questions they will give it as a true, because if the question is false, you somehow easily find it, and if it is a disagree, you will change it to agree. Someone, what they will do, someone, those who are not at study, they will say it is called as error of principle, error of omission, they will have something. It's something which is, if the effect of errors is not committed cancel out, then it will be called as compensating errors. At the time the trial balance will exist, somehow differently they will write. So what they need to do, they want to test you whether you have studied logically or not, whether you know conceptually or not. So they will maximum try to test you on false type. So make sure you using this trick at the end. Keep this as a back in mind and use it wisely. Then we will go to question number 9. LLP is governed by Indian Partnership Act 1932. Definitely not. How LLP has been governed by LLP Act 2008? How you can write it in a accounting language? First one, answer is false. Leave first, write down false, box it or underline it. Then immediately on the next line, don't leave a line. Immediately on the next line, write down the provisions of Indian Partnership Act 1932 shall not apply to limited liability partnership. So LLP, Limited Liability Partnership Act, Limited Liability Act 2008 is applicable to limited liability partnership. Then leave a line and then start with a new question. Okay, write down 2 and then A or B and write down true or false, and then immediately on the next line write the reason, and then once the answer is completed, leave a line. So that do like this. Then question number 10. Net income in case of person practicing occasion is determined by preparing a profit and loss account. No, the net income of a person's of practicing occasion will be prepared by a income and expenditure account. It is not a profit and loss account. Then question number 11. Stock at the end, it appears in the trial balance, is taken only to the balance sheet. Yes, true. Stock up depletes. It is the one of the aspects of the double entry system that has been completed. Stock at the end, if appears in the trial balance, that's what I have already mentioned, right? It is known as adjusted against the purchases, so it will be only taken to the balance sheet. The answer is true. Question number 13. In case of sports fund is kept, expenses on account of sports event should be charged to the sports fund. True. Institutions sometimes keep the special funds for some special purposes. In such case, income related to such fund should be added to such funds and expenses should that be deducted from such funds. Okay, any investment will be made should be shown as a separate item to on the balance sheet or asset sides on the balance sheet. Then question number 13. Salary paid in advance is not an expense because it is neither reduce the asset nor increase the liability. Okay, so here the answer is true. Salary paid in advance relates to coming accounting year, that is an upcoming accounting year. It is for the future period because it is nothing to do with the current period. These are the keywords. Relates to the coming accounting period, nothing to do with current period, hence it is not taken to profit and loss account as an expense. It is instead It has shown as a current asset in the balance sheet. Then question number 14. Laboratory and library deposits taken from students in case of educational institution or the shown on the liability side of the balance sheet. The answer is true, because we are studying the school. Once we are at the school time, we will pay a deposit, caution deposit, when we are doing our 10th lab and all. At the time of many of the school, at the time of getting our TC, they will give it back to us. So till the time period, they will treat that part as a security deposit. So it is in the nature of security deposit. It has to be refunded to the students on their leaving the college or the university or the school. So the answer is true. Question number 15. Accrual concept implies accounting on cash basis. No. Cash concept only implies accounting on cash basis. Accrual concept implies accounting on due or accrual basis. Accrual basis of accounting involves recognitions of revenue and cost as and when they accrue. As and when they come to you, you will record it. Okay, irrespective of actual receipts or payments, whether due or not, you should record it. Okay, whether you have received or yet to be received, you should record it. That's what the accrual system is. Hybrid is a combination of cash and combinations of accrual. Then question number 16. The sales books is kept to record both cash and credit sales. No, cash books is merely one for credit sales. It is not for cash sales. Sales book is a register specially kept to record the credit sales of the goods dealt in the firm or in the company. Say cash sales are entered in the cash book, not in the sales book. Okay, the answer is false. Then question number 17. Bank reconciliation statement is prepared to arrive at the bank balance. It is arrived to bank at balance? No. Bank reconciliation statement is prepared to reconcile and explain the causes, that is the differences between bank balance as per cash book and the same as per bank statement as on the particular date. As on the particular date is the keyword. Next, 18th one. Interesting question, important question. Many of them are confusing on this area. The point is, finished goods are normally valued at cost or market price, whichever is higher. The key point is, it is as per AS2. What is AS2, sir? AS2 is nothing but accounting standard 2. In that, finished goods are normally valued at cost or net realizable value, whichever is lower. That's what they have given. The answer is, you should not write or, you should write and. I will show you. Finished goods are normally valued at cost and net realizable value, whichever is lower. This is what the correct. I will tell you. Go to AS2. Okay, this was the document which is available in the MCA portal. That's what the current accounting standard is. In that current accounting standard, go to valuation of inventory. That's what you studied, right? Valuation of inventory. Here, study this. At this point, yeah. What is an inventory? Inventories are the assets held for sale in the ordinary course of business. That is your finished stock, finished goods in the process of production. That is known as WIP, work in progress. In the form of material, supplies are to be consumed in the production process of rendering. This is a raw material. These are known as the inventory. Okay. Then come to this part. Measurement of inventory. Inventory should be valued at lower of cost and net realizable value. This what you should write. Inventory should be valued at lower of cost and net realizable value, whichever is lower. Okay, inventories, that is the finished goods or finished goods, should be valued at lower of cost and net realizable value. Okay, then mark this as an important question. You may get this question. Question number 19, interesting question. Reducing balance method of depreciation is followed to have a uniform charge for depreciation and repairs and maintenance together. There is an important point. True. The point is, in the earlier periods of useful life of a fixed assets, the repairs and maintenance expense, it will be relatively low, because the asset is new. When we purchase a motor vehicle, when you purchase a super bike, or when we purchase a bike, Okay, at that time the repairs and maintenance cost will be low because the asset, the machinery is new. Okay, in the later periods when the asset becomes old, the maintenance cost becomes increases. So we will use written down value method. So at the time of starting the point, depreciation is high in the initial period and it got reduces continuously over the later periods. So depreciation of repairs and maintenance becomes more or less uniform throughout the useful life of the asset. You know one thing, as we are also a human, at the time of initially at the time of a birth, our expenditure, our maintenance, like health issues, everything will be, no, we will not spend much on our health condition. Once we have gotten older and older, all our machinery parts, all our biological parts will become weak, and we need to be on the farm of maintaining our health condition, everything we will spend more. That's what the same thing in case of machinery also. Then question number 20, discount at the time of retirement of the bill is gain for the drawee. No, yeah, wait. Discount at the time of retirement of the bill is a gain for the drawee. Yes, true. Drawee is a person who is accept the bill. Discount at the time of retirement of the bill. Retirement is nothing but a earlier payment. Okay, is a gain for the drawee. As he is getting yearly, it is a gain for the drawee, and it is loss for the drawer. Is getting a earlier payment, so you need to give some discount. That discount is a gain for the drawee. Drawee means here the payer, okay, or the acceptor of the bill. Next, 21. A withdrawal of cash from a business by a proprietor should be charged to profit and loss account as an expense. The withdrawal of cash, the entry will be drawings to cash. So in that case, false. Cash withdrawal by a proprietor from his business should be treated as a drawings and not a business expense chargeable to the profit and loss account. You should not charge to P&L account. Such drawings should be deducted, is the keyword, from the proprietor's capital, from the owner's capital. Then question number 22. Partners can share the profit or losses in the ratio, in their capital ratio, when there is no agreement. No, according to Partnership Act 1932, whenever you come, you will write the act, write the year also. According to Partnership Act 1932, in the absence of any agreement to the contrary on the profits and losses are to be shared among them equally among the partners. The answer is false. Then question number 23. Receipts and payments account highlights total income and expenditure account. No, it is false. Receipts and payments account indicates classified summary of cash receipts and cash payments over a certain period. That's what the keyword over means. It can be for current year, it can be for previous year, it can be for the future year, that is your next year. So it can be over a period, over a certain period, together with the cash and bank balance at the beginning and the closing period. Okay, if you want to write further, it is a real account in nature, it is another keyword, you can write it. Then 24. The results and the positions disclosed by the final accounts are not exact. Definitely true. Whatever the results and the positions are there, we'll have a personal bias over there, because then a perspective of from one accountant to another accountant will get easily changed. So they are prepared on the basis of assumptions, conventions, concepts, and personal judgments are there of the persons who prepared them. So it will not be exact, it will not be everything is will not be correct. There will be some miscommunications, miscalculations, errors, mistakes will be there. Then 25. We are in a 1/4 of the stage. We have completed the 25% of the super 100 true or false. So congratulate yourself. We are yet to complete that 25th. Soon 75 is there. I will try to maximize to analyze you, to give you a conceptual clarity over the true or false. So at the time, some of any tricky points also should be there, you can easily manage. Then the rationally behind the opening a suspense account is to tally a trial balance. No, it is not to tally a trial balance. The rationally behind opening a suspense account is to avoid a delay in preparation of financial statements only. It is not to tally the trial balance. We are not at all preparing a suspense account. We are preparing a suspense account only to avoid a delay in the preparations of the financial statements. Once the financial statements are prepared, once we have submitted, and then we will find out the mistakes and we will take more time to analyze it, and then we will cancel that suspense account. Then 26th, this question is already been covered over here, so you can they give some different explanation. The asset is no because it is relatively lower, so you can refer that question. Then the depreciation question. 27. Accounting can be viewed as an information system which has its input, processing methods, and output. True. Accounting is a process of identifying, measuring, and communicating information to the permit informed judgments and decisions. So it covers preparations of financial statements, and it is an output is a preparation to the communication to the users of the accounts. So it is true only. 28. The value of human resources is generally shown as assets in the balance sheet. No, human resources is a qualitative technique. Qualitative items will not be in the terms of balance sheet, because we will only record monetary item as per the monetary concept, money measurement concept. We will only record those money in terms of money values only. So the answer is false. The value of human resources cannot be measured in terms of monetary terms. That's it will not be shown in the balance sheet. Then question number 29. The financial statements must disclose all the relevant and reliable information in accordance with full disclosure principle. The answer is true. The financial statements must disclose all relevant and reliable information in accordance with full disclosure principle. Whatever is given, you need to write. If you know some more points regarding full disclosure principles, rewrite it. Then question number 30 is an interesting one. They may create different questions over here. Listen this carefully. A debit note is issued or used to prepare a sales written book. No, I will give you a meaning over here, explanation over here. A is a person. A is selling the goods to B. From A's point of view, A is a seller, B is a buyer. From B's point of view, B is a buyer, A is a seller. That's what you know. At the time of selling the goods, A will pass the entries in his books, that's B's account to sales account. Everything, let's assume it is on a credit basis. B to sales. Then once from the point of view of B, in B's books, he will record purchases to A. Okay, purchases to A. So due to some defective, is returning the goods. Who is returning the goods? B is returning the goods to A. Okay, at the time in B's books, what journal entry he will pass? A to purchase return. That's what the entry he will pass. Okay, so at the time B is debiting what? B is debiting A in which book? Purchase return. Okay, debiting A. So he is debiting the A. So B will issue a debit note. B will issue a debit note while preparing a purchase return book. While preparing a purchase return book, debit note will be there at the time of purchase return only. So that's what the point I want to conclude. Same if it is in case of credit note. Okay, the debit note is issued or used to prepare a sales return book. Here you can also change the some point. The credit note are issued or used to prepare sales return book. That's what also another point you can write it. Okay, the debit notes issued or used to prepare purchase return book. Alternative to that point, the credit notes are issued or used to prepare sales return book. That's it. Okay, anyhow it is false only. Okay, 31. A tallied trial balance means that the books of accounts have been prepared as per accepted accounting principles. Very simple. It is false. Why it is false? Trial balance will only check the arithmetical accuracy of accounts, arithmetical accuracy of the books. This everyone know, but they don't know is error of principle and error of commission will not affect the agreement of trial balance. So the trial balance, it should be check only the arithmetical accuracy of the book. Okay, even though error of principle is wrong, instead of purchase 10,000 debit, I put sales 10,000 credit. Even though it is wrong, it is somehow managed to get tally because it is an error of principle. Okay, so you need to be very careful on this point. Next, question number 32. Goods worth was 600 was taken by the proprietor for personal use should be credited to capital account. The answer is false. Goods taken by the proprietor for personal use should be credited to the purchaser's account because he has taken from the goods. Because how the goods has been traded, you will assume he is a trader, he has purchased the goods and he is from the they have withdrawn. So it is reduced from purchases. You need to credit the purchases. If you are crediting the purchases, your expenses is going to come down, your purchase account is going to be come down, unless as goods left or left in the business for sale. Then question number 33. Amount paid to a management company. This may be a new thing for you. Read it carefully. Amount paid to a management company for consultancy to reduce working expenses is a capital expenditure. If the reduced working expenses will generate long-term benefits to the entity, obviously yes, because we are hiring a management consultant. He will give a suggestion to reduce the working capital expenses, day-to-day expenses. Once it has got reduced, okay, if the reduced working expenses will generate a long-term benefits for me, then it should be capitalized. It is a capital expenditure. Amount paid to a management company for consultancy to reduce working expense is a capital expenditure. To reduce that one expense, we are incurring the expense in form of consultancy. Okay, as this is an expenditure, will generate long term benefit to the entity. As long as it is generate long term benefit to the entity, it will be treated as a capital expenditure. Question number 34. Where there is a no agreement among the partners, the profit and losses of the firm will be shared in the capital ratio. I think so we have already covered. I just will mark it according to Indian Partnership Act, right? 1932. Don't omit this. Write down 1932. In the absence of any agreement to the contrary of a profit and losses of the firm are shared equally among the partners. That's what we have already covered. Then question number 35. When the shares are forfeited, share capital account is debited with called up of the share forfeited, and the share forfeiture account is credited with the calls in arrears of the share forfeited. The answer is false. When the shares are forfeited, the share capital account is debited with called up value of share forfeiture, and the share forfeiture account is credited with amount received on the shares. The answer is correct till this point. Okay, till this point is corrected. This is not in calls in arrears amount. We have not forfeited. We have forfeited the amount already received. That's what we are crediting it. So what is the purpose of crediting? Because it is a gain for us, it is a profit for us, it is an income for us, so we are going to credit it. So it is an amount received on shares already. That's what we have forfeited. Question number 36. When there is no partnership deed prevails, the interest on loan of a partner to be paid at 6%. Definitely true. As per Indian Partnership Act 1932, when there is no partnership deed, when there is no partnership deed, Indian Partnership Act 1932 will be applied for settling the dispute. Settling the dispute is a key word. Interest on loan is to be payable at 6% per annum. Okay, you should use the word payable as per Indian Partnership Act 1932. Whenever you are writing any act, write that year itself also. Okay. Then question number 37. Mercer's Raj and Yog and Company runs a cave. They renovated some of the old cabins. Because of this renovation, some space was made free. The number of cabins was increased from 25 to 28. The total expenditure incurred was 50,000. This was treated as a revenue expenditure. How you can treat the revenue expenditure? I have a shop. In that previously there was a 4 table. Okay, there is some equipment or some wall is there. Here the wall is there. After some time, I have removed that wall, and I have already added 2 extra tables. At the time of 4 table, while at the coffee shop or whatever the shop, I am generating 10,000 revenue. While adding this to my revenue is going to generate to 12,000. It is increasing my long term efficiency, long term profitability. So it will not be treated as a revenue expenditure, it will be treated as a capital expenditure. Renovations of a cabs increase the number of cabins. This is an effect of future revenue generating capability of the business. This renovation expense is a capital expenditure. It is a capital expenditure. Then question number 38. And I want to give you one more clarity over here. Here in this PDF, we have not covered dissolution, we have not covered bonus, we have not covered redemption of shares and redemption of debentures, and here we are not covered single entry system. Those 4 topics we have already covered. You can study your book back ICA study material. Study that ICA study material. That's like a Bible. Study that. It's like a Quran or it's like a Bhagavad Gita, like that. So study that. That's one more than sufficient. All the book back questions only going to be tested in slightly numerical changes. One or two adjustments will be inserted. So make sure you are following that ICA study material. Then question number 38 will come back. If the amount is posted in the wrong account or it is written on the wrong side of the account, it is called error of principle. The answer is false. Here, what is an error of principle? Error of principle is nothing but changing the principle itself is wrong. Treating a revenue item as a capital item, treating a capital item as a revenue item. You can write this as a two-way part. Okay, if you want to change this entirely thing, change it and keep it error of principle as remain same. If you want to change error of principle, then you need to change this part. Amount is posted in a wrong account or it's written on the wrong side of the account, it is not error of principle, it is error of commission. The keyword is error of commission. Then question number 13. A partnership firm cannot own any assets. Yes, the answer is true, because there is no distinct separate legal entity. There are no separate legal entity in terms of partnership, because they are having unlimited liability. So therefore they cannot own any assets. They can own assets, but should be in the name of the partners. Okay, the partners owns the assets of the firm. That's what the keyword is, and it cannot own any assets is the another keyword. Question number 40. Goodwill is an intangible asset, therefore it cannot be valued. No, even though goodwill is an intangible asset, it can be valued in terms of money. It can be valued in terms of money. Repeat with me. Goodwill, even though goodwill is an intangible asset, it can be valued in terms of money. It can be measured in terms of physical units. Then question number 41. The gain from sale of capital assets need not to be added to the revenue to ascertain the net profits of the business. This question is a crucial question. They may test you. True. The profit on sale of capital assets should not be added to the revenue to ascertain the profit, since it has not been earned due to the normal business operation. Anything which is need to be earned during the normal business operation, that should be treated to ascertain the net profit of the business, we will add it. Okay, then question number 42. Sale of office furniture should be credited to the profit and loss account. No, sale of an office furniture, how you can credit it to the profit and loss account? Sale of office furniture should be credited to furniture account, since it is a capital receipt, because it is an office expenditure, it is not our goods. Okay, it is a capital asset. Then 43. A partnership firm can acquire a fixed asset in the name of the firm. That's what the reverse question here. No, false. Partnership firm cannot acquire any fixed assets in its name, since it is not a separate legal entity. It can acquire a fixed assets in the name of the partners. This was an indirect speech, pa. This question was a direct speech. Okay, whatever you need to write it, whether it is you need to write it in a direct speech or indirect speech, you can easily write it. The answer is up to you. Okay, refer any two and you can write it. Question number 44. Debenture holders enjoys voting rights in the company? No, definitely not. Debenture holders do not enjoy voting rights in the company, because they are not the members, they are the debenture holders. Then 45. Outstanding salaries for the previous year shall be shown as a liability in the current year of the balance sheet. The answer is false, because it shall be disclosed as a current liability in the opening balance sheet. It will not be in the current year balance sheet. Means current year balance sheet replicates closing balance sheet. We cannot show the previous year's liability. It will show us as a current liability in the opening balance sheet. We are at the 45% completion is over. Another 5% to appear for that half century. You are going to put on half century in this true or false. As you are writing your accountancy exam, India is going to play a cricket. So you need to complete this true or false to put that half century, so that you will believe that India also will win. Okay. So focus on your exam preparation, guys. Don't watch television for the next 8 days. Just 8 more days to go. Okay, from 20th till 26th, that's if you somehow calculate, it's only 7 days. Okay, stay focused. Today, focus is the new IQ. So make sure you are focusing on your preparation, focusing on that foundation. Many of them I'm getting a queries, many of them are writing 3 attempts, 4 attempts in CA foundation. It's not that much in CA foundation itself to take so many attempts. So make sure you are clearing it in first attempt, so that we are trying our best efforts to help you to find out the 12 marks of a MCQ within 12 marks of true or false in your hand. Next, question number 46. Bills receivable and bills payable books are the types of subsidiary books. Yes, they are the types of subsidiary books, which is an alternative to the journals. If you want further more to write on bills receivables and bills payables, you can add on point to it. Then 47. Subsidy received from the government for working capital by a manufacturing concern is a revenue receipt. The answer is true, because it will not generate that future capacity of the business. So it will generate it will commonly generate the revenue. So subsidy received from the government for working capital by a manufacturing concern is a revenue receipt, because it has no effect in the improvement of future capacity of the business. Question number 48. Interesting question, they may test you. Accounting standards of non-corporate entities in India are issued by the central government. The answer is false. Accounting standards for non-corporate entities in India are issued by Institute of Chartered Accountants of India, ICAI. Then question number 41. Amount spent on construction of temporary areas which are necessary for constructions of cinema house and were demolished when the cinema house was ready. It is a capital expenditure. The answer is true, because without a temporary huts you cannot build a cinema house. The small huts is needed to save some goods, to to stay halt with some people. The construction workers needs to be stay over there in the temporary areas. All the construction materials will be there in the temporary areas. Without temporary areas we cannot even build the house itself. Okay, so it is stated as a capital expenditure. Any expenditure which is related to the capital asset to make to put to use will be added to that asset to make them capitalized it. Okay, since temporary assets are necessary for construction, their cost should be added to the cost of cinema hall and then capitalized. Then we are up the 50% mark. Congratulate yourself, you are in the 50 mark. Another 50 more to go, we will quickly do it. Valuation of inventory at cost or net realizable value, whichever is less, is based on principle of conservatism. The answer is true. The conservatism concept states that one shall not account for anticipated profits but shall provide for all prospective losses. These are the technical words. Okay, all prospective losses, not account for future profits. Don't write it future profits. Nor shall not account for anticipated profits but shall provide for all prospective losses. It's like something, if you want to put some scene in the answer papers, you should write all prospective losses instead of all future losses. What you need to do, all prospective losses. The examiner mind will change, they will award you 2 marks over here. I will give you one more tip. You will get, if you study capital expenditure, revenue expenditure, revenue receipt, capital receipt, if you know how to bifurcate this four, they will ask 1 2 mark, that is one true or false from it. Sometimes they may ask 2 questions, so it will be 4 marks for you. It's like a cakewalk, you can easily do it. Okay, but here again the point is, what you need to tell me again. As per AS2, the valuation of inventory should be at cost and net realizable value, whichever is less, therefore based on the principle of conservatism. Next, 51. In case of bills of exchange, the drawer and the payee may not be the same person, but in case of promissory note, the maker and the payee may be the same person. The answer is false. Who is a drawer? Drawer is a person who draws the bill. Who is a payee? Payee is a receiver. Okay, how the drawer and receiver will be the same person? Okay, how the drawer and receiver will always be the same person? Okay, but in case of promissory note, the maker and the payee may be the same person. Payee means who is a receiver. Maker means who is make the bill. Okay, who is promised to make the bill. Okay, the drawer and payee may be a same person in case of bill taxation, where a promissory note, maker and payee cannot be a same person. He cannot make bill on himself. Question number 52. Since a company has existence and independent of its members, it continues to be in existence despite of death, insolvency of change of members. The answer is true. As per the perpetual succession, as per perpetual extension. extends. Company has extends independent of its members. It continues to be extends in despite the death, insolvency, or change of members. Question number 53. In case of admission of a new partner in a partnership firm, revaluation account is transferred to all partners in the new profit sharing ratio. No, should not be transferred in new profit sharing ratio. It should be in the form of old profit sharing ratio. If you want to add one more point to it, the profit and losses of a revaluation account is transferred. It's not to all partners, it is only to the old partners. When it is all partners, at the time of retirement of a retiring partner in a partnership firm, the profit and losses on a revaluation is transferred to remaining all partners in old profit sharing ratio. That's how you need to write it. Maximum try to write it in same way. Okay, question number 54. Important question, interesting question. In the balance sheet of X Limited, preliminary expense amount to 5 lakh and securities premium amount to 35 lakhs are appearing. The accountant can use the balances in the securities premium account to write off preliminary expenses whenever preliminary expenses came, whenever bonus issues came, whenever redemption of preferences, redemption of debentures, buyback, preliminary expenses came. Your mind should think of for section 52. What is section 52? Utilization of securities premium account. According to section 52 of Companies Act 2013, securities premium account may be used by the company, or instead of use the word you can use the utilized, may be utilized by the company to write off preliminary expenses of the company. Thus, accountant, you should write this point. Thus, an accountant can use the balance in a securities premium account to write off the preliminary expenses amount to rupees 5 lakh. Question 55. Insurance claim received on account of plant and machinery completely damaged by fire is a capital receipt. The answer is true. Definitely true. On account of plant and machinery completely damaged, fire is a capital receipt because as it is not obtained in the course of normal business activity, it is not an insurance claim received on account of goods purchased. Sorry guys, it is a goods on plant and machinery. It is not a goods, it is upon plant and machinery, so it is a capital receipt only. Question number 56. Purchase of an office furniture and fixtures of rupees 2500 has been debited to general expense account. It is an error of omission. No guys, they are treating an they are treating an capital item as an expenses. It is not a omission, it is a principle. When a transaction is recorded, listen carefully. On a contraventions of an accounting principle, you may get this question in your examination. It's like treating and purchase of an asset as an expense. It is an error of principle. Purchase of office furniture is a capital expenditure. If debited to general expenses account, is an error of principle and not an error of omission. Question number 57. Interesting question. A concern proposes to discontinue its business from December 2020 and decides to dispose all of its plant within a period of 3 months. The balance sheet as on December 31st, 2020 shall continue to indicate the plans at historical cost as the assets will be disposed of after the balance sheet. Very simple. They are in the mindset to discontinue business. Whenever they are in the mindset to discontinue the business is not going to happen in a foreseeable future. All the assets and liabilities should be valued at realizable value, not at historical cost. Only if you are a going concern, then go with historical cost. If you are not a going concern, if you are already decided to close it, then measure at net realizable value, that is your market value. Then 58. Debenture interest is payable after the payment of preference dividend but before the payment of equity dividend. No, it is paid to be before any dividend. Debenture interest is payable before any dividend because we will pay a third party liability and then come to our own company issue. Okay, our own house issue. Then 59. Any amount spent to minimize the working expenses or revenue expenditure, as we have already covered. I think so. Yeah, false. It may be reasonably presumed that money spent on reducing revenue expenditure would have generated long-term benefits, so it is to the entity, so it is a capital expenditure. Question number 60. Expenses incurred on repairs for the first time on purchase of a old building or capital expense. The answer is 2, because while purchasing a old building, demolished building, or somehow 50% there is some damages, or that I need to change it, I need to whitewash it, everything needs to be happen for the first time of a purchase of an old building. It should be put it in a usable condition. That usable condition is the key word. This cost is a part of cost of building, so it is a capital expenditure. 61. The provision of bad debts is debited to sundry debtors account. The answer is false. The provision for bad debts is debited to profit and loss account. In a balance sheet, it's shown either on liability side or deducted from the head debtors. It is deducted. Okay, read this question again. The provision of bad debts is debited to sundry debtors account. Answer is false. You will read this point again. In the balance sheet, it is shown either on the liability side. You can show provision PDD on liability side because it is a liability item only. Or you can deduct it from the head of debtors. Many of them are only know in debtors. You will write debtors, less provision for debtors or reserve for debtors, and you are in no. Even in debtors, you can show it in the asset side if you can reduce it, or instead you can put it on the liability side as a PDD item. It's not an issue. Question number 62. Non-participating preference shareholders enjoy voting rights. The answer is false. And a share on which only fixed rate of dividend is paid on every year. On that, always remember one thing I will tell you. Many of them are confused about dividend and interest. Always when it comes to preference, it is dividend. When it comes to debentures, it is interest. Debenture interest, preference, dividend. Okay. On the surplus of winding up is called non-participating preference shares. Non-participating preference shareholders do not enjoy voting rights. Mark it as important, guys. Question number 63. Discount column of a cash book is never balanced. Obviously, yes. Discount column is only totaled and transferred to discount allowed or received account. Okay, totaled and transfer is a keyword. Discount allowed and received is a keyword. This meaning should be conveyed. Question number 64. Gauri purchased worth of 75,800 at 5% goods worth of 75,800 at 5% trade discount, and she paid half of the amount in cash. The amount appearing in the purchase book is 36,005. Whether it is true or correct? First, we will go with it. From 75,800, a trade discount of 5% should be reduced. It is 3790. If you reduce it, will become 72010. Out of it, 50 is paid. If 50 is paid, 36005 is paid. Remaining 36005 is yet to be paid. That we will show it in the purchase book. Okay, they say purchase book. It is not purchase account. It is not purchase account. It is purchase book. 65. All personal and real accounts are recorded in the P&L account. The answer is false. All personal, debtors, creditors, simply think. All real accounts, assets will record in which balance side? Balance sheet. That's it. Question number 66. Amount spent on replacement of own part of machinery is a capital. What is own part? Own part is damage. It is too old. You cannot use it further. It is a capital expenditure. The answer is false. Amount spent on replacement of any own part of machinery is a revenue expense since it is a part of maintenance cost. Since it is part of maintenance cost, it will not generate any revenue over it. 67. When closing inventory is overstated, net income for an accounting period will be understated. I will give a clarity over this point. Keep this as your original data. Sales is 100, closing stock is 50, opening stock is 50, purchases is 30. What is your GP ratio? 70. Keep it purchases, let's say make it as 30. Okay. What is your GP ratio? I am selling at a 100% margin, like this assume. Okay. GP is 70. what is actually happened, instead of 50 they put 70. Remaining all items remain same. 100, 50, 30 remain same. What has happened from 170, from 70 it has increased to 90. So when closing stock is overstated, GP is increased. So when closing inventory is overstated, net income of an accounting period will be overstated. Net income means if you want to go further, you need to do, here you need to write GP. GP is 90. Let's say you are having a salary over here. The same salary you need to write it here. It is 70. Salary, let's say 10. Now your NP, that is your net income, net profit will become 60. Now what will happen? Salary remains 10. Now your net profit will become how much? 80. So that's how the net income also got increased from 60 to 80. So the answer is false. Then question number 68. Interest on calls in arrears is payable by a company to a shareholder. The answer is false. Interest on calls in arrears is nothing but arrears which yet to be paid by the shareholder to a company, by a shareholder to a company. But as per the table F of the Companies Act 2013, it should be charged at the rate not exceeding 10% per annum. If it is an advance, it is not exceeding 12% per annum. Not exceeding is a keyword. Okay, if you want to write more key points over here, you can add on to this question number 68. Then it will make sure you will getting 2 out of 2 marks. Okay, at least write explanation for 2 to 3 lines. It is minimally required. If that true or false question itself will require one, there is only one line to explain, just write it in one line. If there is more explanations required, write it. Secure those 2 marks. Don't lose half mark even. Okay, that half mark will play a very crucial role. Question number 69. The financial statements are prepared on the assumption that on the enterprise is a going concern and will continue its operation for the foreseeable future. The answer is false. The financial statements are normally prepared on an assumption that an enterprise is a going concern and it will continue its operation in the foreseeable future. It's question number 70. 5 more to go to achieve a 75 percentage mark. Okay, periodic inventory system is a method of ascertaining an inventory by taking on the actual physical count. The answer is 2. Under a periodic inventory system, actual physical count of an inventory will be taken for all the inventory as and on the particular date. We will go for physical verification of asset, physical verification of stock, right? At the time we will use this. Question number 71. The provision for discount on creditors often not provided in keeping with principles of conservatism. This will be a crucial one. Okay. The point is, the answer is 2. According to principles of conservatism provision, is to be maintained for the losses to be incurred in the future or to be possibility in the future. Discount on creditors is an income, so provision is not to be maintained as per conservatism or the prudence concept. Then 72. If the errors are detected after preparing a trial balance, then all the errors are to be rectified through suspense account. The answer is false. If the errors are detected after preparing a trial balance, then all the errors are not rectified to the suspense account. There may be an error of principal. There may be an error of compensating error, errors of complete omission, which can be rectified without opening a suspense account. Then question number 73. Both revenue and capital nature transactions are recorded in receipts and payments account. Mark it as important. The answer is true. All the receipts and payments, whether revenue or capital in nature, are included in capital receipts and payments account. If they ask, you can write this statement also in different way. Both revenue, only revenue nature transactions are recorded in the income and expenditure account. You can write it alternatively. Only capital nature transactions are recorded in the balance sheet. Okay, you will written third. Both revenue and capital nature transactions are recorded in receipts and payments account. Either you can say this as a false, either you can say this as a true. It's up to you. I will make sure maximum try to change 1 or 2 words to find out the answer. Don't state complete statement over there. You may be entered in wrong. 74. A fixed charge generally covers all the assets of the company, including future one. The answer is false. The fixed charge will as a mortgage on specific assets. A floating charge is generally covers all the assets of the company, including the future one. Then question number 75. A claim that an enterprise is pursuing through a legal process where an outcome is a certain, uncertain. Okay, you may not able to predict it. It is a contingent liability. The answer is it is a contingent asset. Why I will tell you. A claim that an enterprise is pursuing through a legal process where the outcome is uncertain, it's a contingent asset. What is a contingent asset? Simply, it is an independent of companies owns action to come and to pass in future. Okay, it's very simple. It is not in the company's hands whether to predict or whether they will win a legal process or not. So it is an independent of company's owns action, so to pass in future, so it will be a contingent asset. Question number 76. Now we have done with 75 percentage, 25 more to go. Okay, you have spent almost 1 hour of time. Another give me 10 to 15 minutes. I will give you good concept clarity over next 25 questions. Then question number 76. At the end of an accounting year, all nominal accounts of the ledger book or balance. The answer is false. At the end of an accounting year, all nominal accounts of a ledger book are totaled and transferred to profit and loss. Many of them will commit a mistake over there. So mark it as an important. Mark it as an important. Many of them will commit. They will write it some as true because no, it is false. The ledger book account are maintained. It is not all amounts of ledger book are totaled and transferred to P&L. It is not get balanced. It is not get completed in the ledger itself. It will be transferred to trial balance and then transferred to P&L account. So that's what we have total and transferred to P&L account. 77. Debenture suspense account appears on the liability sides of the balance sheet of the company. The answer is the debenture suspense account appears on the asset sides balance sheet under non-current asset. It is a temporary item, we are creating it. 78. As per concept of conservatism, the accountant shall provide all possible losses but should not anticipated income. The answer is true. Conservatism states that accountant should not anticipate any future income. However, they should provide all possible losses. Question number 79. Interesting question, important question. You may expect a question on it. Under or overcasting of the subsidiary book is an example of error of commission. The answer is true. There is a 4 types of error of commission. One is if the amount is posted in a wrong account, that is error of commission. Amount is posted in a wrong account. Instead of in sales, if you put it in creditors account or debtors account, or it is written on the wrong side, or the totals are wrong. Instead of 5550, you have written 5505. Then it is the totals are wrong, or wrong balance is struck. While balancing, you are committing a mistake. It will be a case of error of commission. Thus, under or overcasting of a subsidiary book is an example of error of commission. 80. Perpetual debentures are payable at the time of liquidations of the company. The answer is true. Perpetual debentures are known as irredeemable debentures, are not repayable during a lifetime of the company. It will be payable only at the time of liquidations of a company. Question number 81. Overhead is defined as a total cost of direct material, direct wages, and direct expenses. No. Overhead is defined as a total cost of indirect material, indirect wages, indirect expenses. Indirect material, wages, expenses cannot be directly linked to units produced. It will be indirectly related to the produce, so it will be treated as a maximum, it will be treated as a period cost. Okay. 82. Sum of the year digit method is an example of accelerated method of charging depreciation. The answer is true. Sum of year digit method is an example of accelerated method of charging depreciation. Higher depreciation will be charged in the early years of the sum of years digit method. Question number 83. Inauguration expense is 10 lakhs incurred on the new unit in an existing business is a capital expenditure. False. Inauguration expense incurred on new unit may help to explore more customers. More customers will come. Okay, this expenditure is a revenue expenditure. As this expenditure may not generate any enduring benefits to the expense more than one accounting period. So it is less than one accounting period. So then we are treating them as a revenue. Okay, it is not a capital expenditure. 84. Discount column of a cash book records trade discount. Discount column of a cash book records trade discount. The answer is false. Discount column of a cash book records only cash discount. Trade discount, we will not put it in our accounts. Trade discount is not even shown in my books of accounts. Then question number 85. If a partner retires, then other partners have a gain in the profit sharing ratio. The answer is true. Whenever the partner is retires, his share of profit or losses will be shared by other partners in their profit sharing ratio. That is a gain for them. Then 86, subscription received for the current year shall be shown in the balance sheet as a current asset. The answer is false. Whatever the money, how I am received, how I can show it in my balance sheet. The received part is shown as an income. It should shown on the credit sides of the income and expenditure, not in the balance sheet. It is not a capital item. Then question number 87. Capital plus long-term liability equal to fixed assets plus current assets plus cash minus current liability. The answer is false. Why false? The right hand side of the equation includes cash twice. How? In current assets also the cash will be there. Separately cash is also there. So it's a part of current asset and another one separately. Thus base accounting equation, equity plus long-term liability is equal to fixed assets plus current assets minus current liability. That was the correct one. Okay. Next one. Question number 88. The balance in petty cash book represents an asset. Okay. The answer is true. The balance represents the cash physically in existence. Therefore, it is an asset. Question number 89. Capital is a all assets. They simply say capital is equal to all assets less fictitious assets. The point is capital is equal to all assets less fictitious assets less external liability. That is third party liability should be deducted. That's what the key point is. Then 90, 10 more to go. Prudence is a concept to recognize an unrealized profit, not losses. The answer is false. Prudence is a concept to recognize future or anticipated losses and not profits. That's what prudence and conservatism concepts is interchangeable concepts. Then 91, preliminary expenses are classified under deferred revenue expenditure. The answer is true. Preliminary expenses are to be treated as a deferred revenue expenditure, as this can be written off over a maximum of 4 to 5 years you can do. Though according to AS 26, preliminary expenses spent in the incorporation of a company should be written off in the year it's incurred. In the year it's incurred itself, you will written off it as per AS 26. This is your inter portion, you will study over there. Then question number 92. Wages paid to workers for erecting machines will be treated as revenue expenditure. What is this erecting machines? There is something known as crane used for construction purpose, and JCB, the JCB brand that will be used for a construction purpose, that will be treated them as a capital expenditure. Without them we could not complete that project or complete that things. Wages paid to the workers of that erection machine, okay, that is a capital expenditure. Then 93, interesting question, you may get this question also. A building of book value 45,000 got demolished and a new building have been book value 17 lakh was constructed. Thus 45,000 is a revenue loss and 17 lakh is a capital receipt. The answer is false. Why? 45,000 is a revenue loss only because it has got demolished. That is loss. I have not yet generated any income. That is a revenue loss. At 17 lakh is a capital expenditure. Okay, it is not a capital receipt, it is a capital expenditure. Then 94, patent right is in the nature of nominal account. No, patent right is in the it is an intangible asset, so it is a real account. Then 95, bank column of a cash book will show only debit balance. No, bank column can also show debit balance as well as credit balance. Cash column of a cash book will only show the debit balance. Bank column will may show debit or credit. Then 96, interest charged by the bank will be deducted when the overdraft as per cash book is a starting point for making a bank reconciliation statement. Okay, interest charged by the bank. Overdraft cash is a starting point. Overdraft cash is a starting point means it is having a credit balance. Interest charged by the bank will be deducted. Okay, interest charged by the bank will be deducted, they said. Okay, interest charged means it has got credited, so credit, okay, it will be added. Interest charged by the bank will be added because it will increase the overdraft balance. Previously I have 10,000 on the credit side part. Now itself bank is also debiting 10,000 on the bank overdraft balance as per cash book. Okay, in that cash book I am having. So it is will become, let's say it is become 1000, so it will become 11,000 on the credit side. So my automatically my uh, overdraft balance will increase. Then 97, no cancellation entry is required when bill is renewed. False. When the bill is renewed, entries are passed for cancellations of the old bill and the recording of the new bill. Okay. Always the cancellation entry should be passed. That reversal of a dishonor entry. Dishonor entry should be passed. Then 98. Refusal by an acceptor to make a payment of the bill on the maturity date is called retirement of the bill. It is not retirement of the bill. It is known as dishonor of the bill. Retirement is an earlier payment. Refusal by an acceptor. Here the acceptor is the drawee. Okay, to make a payment of the bill on the maturity date is called retirement. Refusal of acceptor to make a payment of the bill on the maturity date is called dishonor of the bill. Yearly payment of the bill is known as retirement of the bill. Okay, everybody will stop with this point. Our students, our subscribers, you need to do retirement of the bill. Till this point you need to extend and write it. 99. Goodwill brought in by any incoming partner in cash for joining a partnership firm is taken away by old partners in the new profit sharing ratio. The answer is false. When the new partner brings a cash for a school, it will be taken by the old partners in their sacrificing ratio, not profit sharing ratio. Okay, at the time of retirement or death it will be a gaining ratio. 10, 100. The objective of taking a joint life policy, the century we are going to hit a century. Then if you like it, just press bell, just subscribe to our YouTube channel and press the like button and share it with your friends. Your friends will also get a benefit over this. The objective of taking a joint life policy by a partnership firm is to secure the lives of the existing partners of the firm. The answer is false. The objective of taking a joint life policy is to enable the firm to make the payment to the legal representatives of the deceased partner or to the retiring partner. So the answer is false. Okay, so that's it, and comes to an end of the Super 100 series. I wish you all the best for your exams. Do your exams well. Okay, tomorrow do your exams well. Keep your mindset really calm. Focus what you have studied. Okay, don't prepare newly. uh, don't discuss, kindly don't discuss with your friends. Go to the exam hall at the at exactly at 1 o'clock. Be in the examination center. In examination hall you need to be there at 1:40. Keep calm, be seated. Just keep it very your mind calm, and then get a question paper at 1:45. Don't study true or false. Study from the back. Turn out the question paper. Study from company accounts, or study from other different areas. In 15 minutes plan what you need to do. Okay, what is the first best question you need to write, and the second best question, third best question, what you need to do. Then when you come to true or false, everything you should decide. Okay, I would suggest to write true or false at last half an hour. Keep it at any point. The last half an hour or last half an hour should be for true or false. Wherever you stuck on that 2.5 hours, just come to true or false immediately at 4:30. 4:30 and all you should come at true or false. Okay, write it. Okay, write it in such a way how we have given in a certified copy video. Go and refer in the playlist. In the playlist I have given below. Okay, so make sure this June 2024 is going to be yours. All the best. As I always tell to my students, believe in yourself, always trust the process. You are going to achieve on this May, and you will say on the result day you have done it. You make your parents proud. This is signing off of Sudarshan. Have a great day, guys. Thank you.